Oh God, listen to you. You're very clever, aren't you? Let's take a look. $1,325. And the big question, of course, is what can that actually buy you? Well, if you live in Boston and in an area called Springfield, that's your monthly rent, average monthly rent for an apartment. The government of Norway, Francis, tried to get citizens to say, please can you pay extra tax if you'd like to donate to government? And guess how much they managed to raise from that effort?
That entire effort, or per person?
That entire effort. They managed to raise $1,325. That's about it.
That's ridiculous.
Nobody wants to pay extra tax. But you're right, all that glitters is gold, isn't it? $1,325 will buy you an ounce of gold. Yes, it's the price of gold. The price of the metal rose to $1,325 an ounce during trade today. That is its highest level this year, and in fact, the highest level since November last year. Our number of the day is a great illustration of how markets react to political tensions in the world. Gold tends to rise when investors are anxious about it and is seen as a safe haven, which means something that is likely to retain its value when other assets are volatile. And tension was high today after North Korea launched what seemed to be a ballistic missile over northern Japan, close to South Korea. Well, the gold price helped lift the gold miners here on the JSE, even though the other counters were down. But North Korea's latest test weighed on other stocks around the world, and the JSE closed 0.25% in the red as well. But $1,325. Maybe it's time to go out and get some Krugerrands. Who knows? Anyway, let's explore those market movements a little more. Earlier, Francis spoke to independent analyst Chris Gilmour. She started by asking him if North Korea was responsible for falls in stocks around the globe today.
What we're seeing now is a heightened degree of nervousness on world markets. It's been apparent for quite a long time now. North Korea is just the latest in a whole series of events that have spooked the markets. Markets are high, and particularly the US market, the S&P. And, this is the longest running bull market, one of the longest running bull markets in history. And a lot of people have expressed concern that we could be topping out and we could be due for a correction. So I think, a lot of market participants are looking for any excuse to mark the markets down. If we look at North Korea specifically, I think, we have to look at the dynamics here. Kim Jong-un is nothing but a gangster, and he's basically taken the view, it's a game of chicken, basically. He's throwing these ballistic missiles into the Sea of Japan. It's not the first time he's done it going over Japan. This has happened a couple of times before in the past. And I think he knows full well that the Americans are not going to nuke him. They're not going to, even with a fellow like Trump at the helm, I think it's very unlikely that the Americans are going to respond with a nuclear option. What I think he wants, though, this is a dirt poor country, and they put all the money they've got pretty much into military spending. What I think he needs to get the Americans particularly on side, and to help them actually get out of the mess in which the North Koreans find themselves. So it's a very elaborate game of chicken, I think. Markets are responding as if something nasty is going to happen. Frankly, I don't think it is. But I think in the next few days we'll see markets probably calm down in the wake of all of this.
Okay, interesting. So you're saying they're not acting on a real threat of war. And maybe this explains what we've seen before. There were tensions between Washington, D.C. and Pyongyang. And it seems like we're living in a world where there's a crisis per day. But the markets bounce back very quickly. So this too will bounce back.
That's right. As I said before, I think, the markets are very, very high. I mean, if you look at the cyclically adjusted price-earnings ratio as composed by Professor Robert Shiller, I mean, he'll show you that only on two previous occasions, I think it was certainly 1929 and in the dot-com bubble, have we seen markets this high before. So they are high, they are precariously high, and therefore it's perhaps not surprising that you see this embedded nervousness taking place. Coupled with that, you've had a lot of very well-known market observers, guys like Jim Rogers, who are talking about us being on the edge of a precipice. We see the big US banks pulling back from the brink and selling their own shares recently. So, I think we've got all the ingredients probably for a correction, and thus when you get any little thing, and frankly I categorize this North Korean thing as a little thing because I don't really see it as being that much out of the ordinary, then I think markets get spooked very, very easily. And to come back to your original point, I think once this has died down out of the way, we wait for the next little crisis that will probably spook the markets.
When you talk about a correction, what would that mean for the JSE? And let's put this in context, that the JSE is doing incredibly well this year, but a lot of that is due to one stock that's heavily weighted, Naspers. Not a great performance from the rest of the market, right?
That's right. Naspers currently must be about 20% of the market. So you're quite right, Francis. With that moving up so nicely, and of course, in turn is predicated on Tencent, which in turn is predicated on China. So with the Chinese economy performing better than many people had anticipated earlier this year, it's all flowing through. So as a result, you're quite right. We're seeing the JSE up about 11% this year. The nice thing about the JSE, there's two really very nice things about it. One, if you look at the market capitalization of the JSE, the top 10 components of the JSE account for something like 70% of the total market capitalization of the entire exchange. So we're talking about companies like Naspers, we're talking about BAT, we're talking about Richemont, we're talking about Anheuser-Busch InBev, this type of thing. It's the kind of index that a lot of foreign players like to get into. We're categorized as an emerging economy, but nevertheless, because of the composition of our index, it's very, very attractive to investors and speculators alike from outside. The other thing is the Rand. We are sitting really very much on the edge of a precipice here as far as the ratings agencies are concerned. If we were to suffer another ratings downgrade towards the end of the year, then I think that would undoubtedly see an outflow of bonds, which in turn would make the currency go an awful lot weaker. But, and this is the magic ingredient here, because of that composition I just referred to a moment ago, the fact that the top 10 account for about 70% of the total market cap of the JSE, and those are mainly earning dollar revenues or listed outside of South Africa, a weak rand sends the prices of those stocks, like Naspers, significantly higher. So basically, when you buy the JSE, you're effectively buying into foreign companies around the world.
So you don't even need to go and find those global options. Naspers is so interesting because there's been this massive remuneration debate this week. Outline that for us and tell me what you think it means for shareholder activism and for ordinary South Africans or people around the world who are very concerned about executive pay at the moment.
Couple of things here. First of all, if you look at the shareholding structure of Naspers with their N shares, that really is a bit of a nonsense, and that shouldn't really be allowed. And I think that's one of the problems that shareholder activists like Theo Botha have. And he was at the shareholder meeting the other day. And Theo is a very vocal activist, as I'm sure we're all aware, but didn't really get much of a chance to talk because Koos Bekker, the CEO, pretty much closed things off by saying, "I've ruled on it, that move on," type of thing, in a very, very autocratic manner. It's a difficult one, Francis, because if you look at what has happened with Naspers, an awful lot of people in the management echelons of Naspers have done extremely well. And the shareholders have done extremely well. So, you've got this kind of catch-22 situation. You might not like the shareholding structure. You might not like the autocratic way in which it's being run. But at the same time, you've derived a huge amount of benefit from it. And it's debatable what would happen if you saw a restructuring, if you saw an unbundling of Tencent, for example, something which Koos Bekker and his management team seem to be vehemently opposed to. I mean, I know Koos is the chairman, not the CEO, but this type of thing is something they really don't want to go down the road. We've got quite a few fund managers around the world who are actually vocalizing this and saying, yes, we'd like to see the two being split off. And that way you get greater transparency on the non-10 cent aspects of I almost said DSTV, of Naspers. But and that, I think, from an analytical perspective, would be really, really nice. But I think that's probably a way off yet, unfortunately.
Well, they do own DSTV. Final question for you, Chris, because we're running out of time. What about the real economy? We fell into recession in the first quarter of this year. Everybody's trying to think how comfortably we'll come out of that in the second quarter. What does Basil Reid results yesterday mean, and all the retail results that you've been watching as well?
Yeah, the retail figures I find very perplexing in the sense that Stats SA is putting out retail sales figures which are showing a bit of a rebound. And I find this quite interesting, given the fact that the JSE listed retailers, with one or two exceptions, are showing really very, very poor growth indeed, very much in a downturn. On the construction side, you mentioned Basil Reid. I mean, they're really in a real mess. And they are not reflecting at all anything that government's talking about in terms of this huge, phantom infrastructure spend that's supposed to be taking place in the economy. Nothing of the kind is taking place, as we all know. Because if it were, we'd see order books far more healthy than they currently are. So the real economy, I really don't think is doing an awful lot. I think as far as second quarter GDP is concerned, we will see a bounce back, if for no other reason than we're looking at a very, very weak first quarter. And we've seen slight improvements in other parts of the economy. So I think it's possible. I'm not saying it will happen, but I think it's possible. We may see a little bit of a rebound in the second quarter, which should put a little bit of a brake on recessionary fears. But as we go further into the year, there's really no relief in sight, unfortunately.
It was analyst Chris Gilmour saying that the real economy is looking a little bit better. No great shakes.
Well, and also talking about this, the number of the day as well, is, as if North Korea does anything, particularly fire missiles, then it's just going to affect everybody and everything on the entire planet. And it did that today. Asian markets were down, European markets were down. The US has only just started to calm down a little bit because they thought, hang on, let's just see if anything's actually happened. And so the markets have turned a little bit there, but everyone's just scared. It's like, gosh, World War VII is about to happen.
I know, but like we were talking, they've done this before, and then we all get on with life. It depends if Kim Jong-un is playing a game of chicken, like Chris Gilmour says, or if it's real. Who knows? Well, the JSE certainly did react, closing 0.25% in the red. And as Peter said, markets around the world mostly lower after North Korea's latest missile test.
But gold and the Japanese yen rose as investors looked for safe bets. The dollar weakened, and that helped the rand to strengthen above 13 rand to the dollar. The currency was 0.75% stronger at the close today. Here are those numbers. Let's take a look.